Yeah, so what's up, guys? How are we doing? I hope we had a great week last week and hope it was profitable as well. So this new week, you know, we are in December, so that's the last month and in preparation for a new trading year. So we don't stop. So basically, this is Nasdaq, right? And I want to introduce to you guys a series I've been working on. You might be hearing me saying some things, It's a series or a model I've been working with. It's very, very simple. It's called flow series. Follow liquidity, observe willingness. It's just like, it's very simple in that name. Flow, FL, follow liquidity. OW, that's observe willingness. Now, you want to follow liquidity and you want to observe the willingness for price to draw to that liquidity that you're trying to follow. It's very simple, right? In its name, right? Because and in following liquidity, not just anyhow liquidity, not just lower time frame liquidity, because lower time frame liquidity is very primitive, very small, subjective, right? You want to follow higher time frame liquidity. So flow series actually entails three teachings and they are quite broad, right? We have higher time frame liquidity draw, and two, we have AMD and openings, and three, we have frameworks. Now, in this higher time frame liquidity, right, we'll be describing how we can always look out for where liquidity really, really is based on higher time frame narrative and context, right? So AMD and openings is going to give us like, basically AMD is like a mechanism, a mechanism that institutional trader uses to generate liquidity in the real intention for them to draw to their potential liquidity or objective. And openings is just like, you know, there are liquidity areas as well. Let's say price moved away from an opening price. Whenever price moved away from that exact opening price would want to come back to them to, to recollect orders or to rebalance orders in that sense, you know. And frameworks, these frameworks, basically, we're talking about, you know, the how to enter entry model and everything, stuff like that. And it's quite broad there as well, because in that framework, I'll be teaching market structures, that are not the usual ones. They are quite broad. And I'll be teaching, a lot about it, a lot. So I will, you might just hear me speaking, saying some things, stuff like that. So basically, I would like to borrow some of it from my flow series to talk about what price is going to do this week. So yeah, currently we are here, right? So we have two CB. This is the first one, this is the second one. Sorry, this is the first one, this is the second one. This one is the first one. Why? Because when price was going down, this one was created, and this was the second one. Now, in the context of you trying to sell from it, right? You still have to revert to this because this is the first one being created. The first one is going to expose the real structure, because when price was coming down, price will have to break several structure while it's going down. And it's not going to break, it's not just going to go down and break the fifth structure. No, it has to approach the first structure first. And this gap will be in a great confluence to that first structure being broken. You get what I'm saying now? So I will show us a very nice graphical example of that now. Look at this, right? This is a kind of structure, right? We have a lower high here, right? Price broke this low, right? On breaking that low, what do we have? We have first gap here. Do you see that? Or let's use this low, okay? We have one gap here, we have another gap here. All right. So in the context of this structure, because you can see price broke the structure, right? So When this structure was broken, what was the gap that was created? It was this gap, right? This one is higher. So this gap actually co-influences with this structure low, right? So which means price is utilizing this second gap while price is going down. It's of high probability because it coincides with this low. I hope that makes sense. So when price is going down just like this, right? This is the first gap and this is the second one. And when price is going up, this is the first one. This could be like, this could look like the first fair value gap, the first bearish fair value gap, but it's not the first one. This is the first one, right? So whenever price trades to a gap or a CB or a BC, right? I call them hybrids. Hybrids, right? So I have efficient parent hybrids. I have inefficient parent hybrids. All right. I have destroyed parent hybrids. I have destroyed subordinate hybrids. So that's like 4 hybrids of how to deal with a fair value gap, right? So right here, what do we have? So we have price trade to this gap, this first fair value gap when price was going down. So when price trade to this gap, it was efficiently delivered, right? And this is a parent time frame. That is, it's a higher time frame. Okay. So, and this is a parent high, right? Parent highs and lows will be created in the parent time frames. I hope that makes sense. This is a parent high, this is a parent low, right? This is another parent low, this is another parent low, this is another parent low, this is another parent high, parent high, parent high, parent low rather, parent low, parent low, parent low, parent high, parent high, parent high, parent low, right? So parent low, the only place you can find parent low is higher time frames. But in the context of you working inside lower time frame for quicker gains, you can introduce the idea as well that, okay, I have a parent low here because price will rebalance this gap or trace to this CB, right? So now, this is efficient parent high or efficient parent hybrid rather. Efficient parent hybrid, basically. But a high like this, it's not rebalancing any gap. So this is efficient parent high, not efficient parent hybrid. Hybrids are created whenever price trades to a gap. All right. Hybrids are created whenever price trades to a gap. And we have 4 hybrids. We have inefficient parent hybrids. We have efficient parent hybrids. We have destroyed parent hybrids. We have destroyed subordinate hybrids. So basically, this is efficient parent hybrids. And this is a parent high, basically. A parent swing high or parent high. Parent swing high. Why is it a swing high? So you can see this is a very significant high. It has a high to the left and a high to the right. Basically, they are swing high as well. You know, they are a high on their home, right? You can see on this on this right hand side, we have another swing high, another high here to the one high to the left and another high to the right? That is one. And if you look at this one is not really having another high to the right, all right? So, but that does not reduce the fact that it is still a swing kind of high, right? In the context of this high, right? So now this is a parent swing high, this is another parent swing high, this is another parent swing high, okay? But it is not really showing us a high to the right hand side, and that's the flaw that comes with it, but you don't have to it's very perfect just like that. Don't have to try to force everything into perfection. So this is subordinate swing high, right? This is a parent swing high. This is another subordinate swing high, right? Because this was the first high that was created when price created its high here. So this is a destroyed subordinate swing high. Price destroyed it. This high is subordinate to this high. This high is subordinate to this high. That is why, like, it is a child high to this high, a smaller high to this high. This high is a smaller high to this high. That's why that's where the name subordinate comes from. A childlike high to this high, childlike high to this high, a small high to this high, a small high to this high. All right. So this is a destroyed subordinate swing high. These are things that you'll be expecting in price. We have subordinates. This subordinate swing high was destroyed because liquidity is resting above the high. So whenever whenever you have a destroyed subordinate swing high, you have to anticipate a new swing high to form in this context. You have to really understand this. We destroyed liquidity here. We took out a high because basically to take out a high, right? A swing high has to form after a liquidity has been swept above and high, right? So liquidity was taken out at this high in form of buy side liquidity. So you have to anticipate a swing high and a subordinate swing high to follow. After liquidity was swept here, right? You know that you don't want to see any high to take out this next high because you are bearish in price. So which means you'll be anticipating subordinate swing high to form, which is this high. So all your entry, basically, you are not trying to catch this high. You cannot catch it. So your entry is based on subordinate swing high here. Now, let's say as this high has formed, this is another subordinate swing high, and you wanted to enter here and price took it out. It's fine. It's very fine to have losses. Everybody have losses. Now, price has took out this high and it has still shows the intention of selling, which means your entry is right here, subordinate swing high. All your entries when you are selling, should be basically based on subordinate swing high, which is this high right here. And then price keeps going down, keeps going down, keeps going down. If you want to pyramid these cells, you can go to lower time frame to still use the same idea of subordinate swing high, efficient swing high, inefficient swing high, efficient parent hybrid, inefficient parent hybrid, destroyed parent hybrid, destroy subordinate hybrid. You get hybrids, you have to understand that hybrids are created inside gaps, right? And then swing highs, like parent swing highs, subordinate swing highs, they don't need gaps. They are basically, their context is around when price swept liquidity. You understand now? So I'm already teaching us some things that are meant for flow series, basically, right? So we are inside this gap now. So now price has efficiently closed this gap, right? So I called it efficient parent hybrid. It is a parent hybrid. This I is a parent I, basically because it has swing I, that's a high to the left, to the right, and a high to the left of it. A high to the left, to the right, and a high to the left of it. So it's a parent high, all right? The parent high. So efficient because it closed the gap efficiently. So parent hybrid. And I said hybrids are created whenever price trades to a gap, So this is a parent hybrid, okay? So don't forget that we have our subordinate high here. This is subordinate highs. This high is subordinate because it is child to this high. It is smaller to this high. It's a lower high compared to this higher high here. All right. So we have a destroyed subordinate high here. So what we have here is what? Destroyed subordinate hybrid. Okay. We have a destroyed subordinate hybrid here. Now, it is a destroyed subordinate hybrid because it happens inside a gap. Now, this one doesn't happen inside a gap, but it is still a subordinate high. Now, this one is just destroyed subordinate. That's just it. Destroyed subordinate high. That's just it. This one is destroyed subordinate hybrid because it happened that destruction of itself happened inside the gap. That's why we name it hybrid. Destroyed subordinate hybrid. Destroyed subordinate high. Okay. So when this destroyed subordinate hybrid happens, right, you will be anticipating another, kind of subordinate high, right? That will be, in a sense, smaller to this parent high. So basically, this whole idea will be flawed when we have this high taken out eventually, right? We have this high taken out, and then and only then we can be, smelling some kind of, okay, we are, there's change in narrative now. Because basically, when you have an efficient parent hybrid here, we are supposed to be selling, to sell sides. Because after price had an efficient parent hybrid here and displaced against this upclose candle, we are supposed to be selling price, to sell side liquidity. But see what happened, we've already violated the high of that upclose candle now, right? So by destroying the subordinates that is tied to this high, you get what I'm saying now? So basically, once we took out this high, right, we will have changed the narrative to what? To attack this parent swing high. Okay. So basically, what's that telling us? We have to pay attention to this parent swing high. Why is this a parent swing high? Because it swept, parent swing low. Why is this a parent swing low? Because it swept liquidity. And mind you, what do we have? This is not an hybrid because it doesn't happen inside a gap. It's not like price is trading realistically into a gap. All right, it's not. In another context, right, price might be using this whole gap as a support. All right, but if you are paying attention to the real right now context, what is price doing here? Price took out liquidity here, which means this is the parent swing high. This is the subordinate, parent swing low, subordinate low, subordinate low. All right, subordinate low, subordinate low. So immediately price took out this liquidity, and you're already seeing this as what? Subordinate low, which means there's a potential subordinate low that might form there, which means you can literally catch this buy, right? So basically, H1 and 4H, they are my mid time frame. These are like time frames that I use to measure the barometer of it is like a barometer time frames for me to measure the intention of this daily time frame and weekly time frame. I use H4 to measure the intention of weekly time frame. I use H1 to measure the intention of daily time frame, right? 15 minutes and 3 minutes for weekly entries. Once this H4 has already shown me the intention, I will go to 15 minutes or 3 minutes to look for good entries. And once H1 has already showed me the intention of H1, I will go to 5 minutes or 1 minute to look for entries. You can see I have everything well detailed. It's not as if I'm just doing everything randomly. I know what I'm doing. You get. So you have to, that is the level you want to get to. You want to know what you are doing in price. You are not just, you just don't want to be doing everything randomly. You get what I'm saying now? So this is potential subordinate high. subordinate low rather, which means we can now, once this candle closed, right? So we can be looking for like a gap on this candle when price, when price traded to this low, we can be looking for something like a gap on H1 for price to give us like a support, right? So now let's go to H1. Okay, let me go back to a daily. I want to mark out this low. So H1. Now you can see this low now. That is the subordinate low on a daily time frame when price was going up, right? So now, basically on that, you can see price has already rebalanced this gap. All right. So now you can still apply the same idea, right? So now this is inefficient parent hybrid. Why is this an inefficient parent hybrid? Because price does not efficiently deliver that gap, right? But that does not remove the context of price wanting to quickly run to an area of liquidity. Price want to quickly run to an area of liquidity. You get what I'm saying now? So price trade to this gap, 3 p.m. This is 3 p.m., 4 p.m. This is 6 p.m., 8 p.m. This is 8 p.m., 2 a.m. And so you can see price has already closed this. When price was going up, price has closed this inefficiency here, right? And then we have a down close candle on this. This is Asian low, and we have somewhere around here Asian high there. So during London, you can see the expansion that happens against the lows that was created in Asian. Now, from during Asian sections, right? These are when liquidity are being provided. These are when liquidity are being generated. You get what I'm saying now? So something has to happen in London that will manipulate all the liquidity during Asian and collect the whole liquidity. It will collect the whole liquidity to sponsor the real move, which is the buys that happens here, right? As you can see right there. So this Asian low, this is the Asian low. So basically, Asian high and Asian low, you should know that those highs and lows, liquidity are already actually resting below or above them. You get what I'm saying? So it's a high or low that you'll be anticipating price to take out. You get what I'm saying now? So this is the low for the subordinate low, right? So for that day, I think price closed somewhere around there. So price is about to close somewhere around there. I'm looking for 12 a.m. in midnight. So during Asian again, price go back to that Asian low to take it out, right? Now we have to go back to daily. We have to go back to daily. You can see price has not actually, in a sense, destroyed that subordinate because there's an Asian low, right? That price has to take out, right? You can see, look at that low. Price took out that low perfectly because look at this gap right here. This gap is a support, this is inverted fair value gap, right? This gap is supposed to be a selling gap, okay? But price has already inverted it to what? To a buying gap. So during Asian, from Asian, now see, this is 8 p.m. Asian session will start from 8 p.m. to what? 12 a.m. Now look at this now. This is Asian high, this is Asian low. You get what I'm saying now? This is Asian high, this is Asian high, this is Asian low. Now, pay attention to the narrative. The narrative is that price has already took out this liquidity. And you can see this is quite relative equal low. Now, you don't want to see this low taken out. Price can still trade back to this gap because it is still very well inefficient, right? Inefficient parent hybrid. So whenever, if let's just assume that price trade to this gap and took out this low and efficiently close this gap, what are we going to have here? We'll be having destroyed parent hybrid and efficient what? Parent hybrid. You get what I'm saying now? So, but we didn't see that. So it was just inefficient parent hybrid that holds price, which is still very fine. Okay. Now pay attention to the narrative. This is Asian low, this is Asian high. So we have very, very low volume in price during Asian. So if price wants to actually expand very well, that's to engage both eyes. So we have this low, and since we are bullish, right, you would want this low, you will want to be buying below this Asian low right here, which is this low, right? And we have what kind of PDRA do we have here? This is a proportion block. First candle expand against, this is the second candle, right? So the open of that candle, you can see it was perfectly pierced, right? The open of that candle, that's where you will frame your risk around trusting this low to not be taken out. But you have to see that, there's a hierarchical trust you will have in highs or lows in price. Now, you are trusting this PDRA to hold price for a buy because you want this Asian low to be held so that price can engage this Asian high. Now, if price took out that PDRA and took out this inefficient parent hybrid, right? Parent hybrid low, right? It is very perfect in price because it is very, very well inefficient for price. So which means in this case, you'll be anticipating what? Efficient parent hybrid to form so that price can keep going up, right? So you have to always have, let's say now, for the fact that price did not efficiently close this gap, we have reduction in probability for price to run up. But that does not mean that you still don't want to engage, because price forming a proportional gap here still increases the probability of price buying away from there, some sort, right? So basically, what you'll be working with is probabilities. What you are really, really working with is probability. It is not certainty, right? There's no certainty. There's no certainty in the market. Market is full of uncertainty. You get what I'm saying now? So immediately price took out this low. What will you expect? Well, let's say, okay, now you're afraid. You don't want to buy this because you don't know, maybe price will go back to this gap or something. Then wait for price to take out this low until it's formed what? A subordinate swing high, right? So this is a parent high, this is subordinate high. Sorry, this is a parent low, this is a subordinate low, this is another subordinate low, right? It is swing low, right? This is subordinate swing, sorry, this is a subordinate low, and this is the parent swing low, and this is the subordinate swing low as well, right? But this one is parent swing low because it's taking out this liquidity. But this low here is serving another purpose here by triggering this proportion block. So it is all you just trying to gather probabilities to make things make sense, to create narrative around something. You have to have reason for buying. You can't just be buying anyhow. You get what I'm saying now? You can't just be buying. So based on the narrative that is coming directly, based on liquidity dynamics and everything. Now look at this high now. This is an Asian high that is relative to this high, which means this high is a liquidity point in price. All right, it's a liquidity point, which means now let's go back to daily. Let's go back to daily now. So now, which means that you will be anticipating this subordinate hybrid to be violated. You get what I'm saying now? Now, this destroyed subordinate hybrid, it is anticipated from higher time frame. It is anticipated from liquidity perspective. You get what I'm saying now? It is very well anticipated because look at this high. This is one daily high. This is another daily high. All right. But it is very well anticipated because this high is an Asian high and it is relative to this high. So which means we have buy side liquidity there. Okay. So this buys, let's say you are free to buy from this low and then buy from this low right here. This low, immediate price, you see candle close above this high. All these candles, you can treat them as what? As what? As order blocks, bullish order blocks. So you can see I've refined entries around this point. So you can go to 5 minutes. So actually, I took this trade on a 3 minutes basis because there's a breaker there. Basically, price took out this low, this high be acting as well as mitigation. So basically, I had my entry from this high to the low, just like that, right? And then my target was just that relative equal high. So this was Friday's trade. Where's that relative equal highs? Yeah, somewhere around there. Yeah, so that was the target for my sales. Okay. So it was a very, very nice 1 to 2, right? Very, very nice 1 to 2. You can see the narrative is perfect. You just have to have reasons behind your buying and selling. Now, I don't always have to do this all over, all over, all over again. It's because it might be quite taxing because you are still learning. You get what I'm saying now? But when you are there already, it's not hard work. Once you look at the chart, pam, 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 you already know what you want to do. It's there. You've practiced over me. I've practiced over and over again. So it's not that hard for me to generate contest, know what I'm looking for in price. I already have experience. So you want to get to that level. You want to create familiarity with price so that you know easily, you know what you are looking for. You are not stressing, you are not, you just know what you are looking for in price. You get what I'm saying now? So that's that about price. So there's a breaker let's say you are not probably seeing this in price, and probably you want to enter based on lower time frame entries, right? So there's one smaller time frame entries here. So you can see this down close candle. You can enter there, and you can see that we have two gaps, right? You can see that we have two gaps. So price traded to the first gaps, rejected. So price has balanced this first gap, right? This first gap is now balanced because price has moved away from it. This second one, it is not yet balanced because this candle close is still inside of it, right? So this second one does not yet balance as well. This third one does not yet balance until we have this massive one. So you can see the low. When price opened, it opened lower at first, touching this high of this candle, right? So you can enter right there while you frame your risk just like this, something like this, because you are trusting this low not to be taken out. So now what's this low doing? So this is efficient parent hybrid. You can see that the idea is still very, very well just for everything, right? So this is efficient parent hybrid. And inside of that, what do we have? We have destroyed subordinate hybrid because see, inside of that, look at this now. This gap was efficiently delivered, right? You can see price closed that gap efficiently. First one, second one, efficiently, right? Now, this is the subordinate low, this is the subordinate low, but this is the parent efficient low, right? So price destroyed this subordinate low, using it as what? As liquidity to fuel this move that broke this high, right? So you might not be anticipating that for you to catch candle, this candle that expands, right? You would have to be trading somewhere around 30 seconds or 15 seconds, right? And you don't need that for profitability. Now, on this 1 minute, it is quite very, very obvious. Now, you can even treat these two candles as what? As breaker. You can treat the two of them as breaker. But let's just use this down close candle because they are acting as what? As order block. right? So that will be your entry in price. And mind you, it is very well, it coincides exactly with what is happening on the, see, the opening of this candle. Immediately you have, immediately this candle traded finished, right? All the down close candle as acting as what? As other blocks. So you have to refine it. Whenever price trade to this, right? If you are trading this time frame, right, your stop loss will be below this low. But you want to see something to work with on a lower time frame. So you want to go back to a very small time frame to have something to work with, which is why we go to 1 minute to have something there. Even on 5 minutes, it is not that clear, right? So you have to go to 1 minute to have a very, very streamlined and very, very nice entry to work with, and a very, very nice risk to reward ratio as well. So you can see, and you still target that relative equal low, equal highs rather, which is this high. So this is nice 1 to 4, right? This is nice 1 to 4, you know. All this slow, 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 so you have to deal with everything. You have to deal with everything. So basically that's just it. So let's go back to what is going to happen this week. I've taught us a little things about what. So basically, what I think price will do based on liquidity dynamics, right? I think price is going to take out this high, right? Which means we are going to be using this candle as what? As a down close candle, because we now have a new range. This range, from this range high to this range low, because price took out this, we have a new range. We have a new range now, which is this high to this low, because price took out this high already, this low already, and price has already traded above this high, and this is the down close candle. This is the down close candle. This candle is more lower compared to this one, right? So, and down close candle, this candle closed much more lower compared to this one, right? So that makes it very, very much more valid to be a buying candle. So which means we are going to be anticipating a destroyed parent hybrid, okay, and a destroyed parent swing high, which is buy side liquidity. All right, so I'm expecting buys from this guy this week. So JPY, what am I really expecting for this guy? So this is daily time frame basically. You can see, what do we have here? We have efficient parent hybrid, right? Price efficiently delivered to that gap. Okay, efficient parent hybrid, and then you can see this subordinate, the subordinate high there, right? You can go to each one to look for something to work with on that high. So now let's go back to daily. I will show you how price actually used that subordinate high to sell. So let's go to each one. Going to each one. See now. Going to each one. So this was the subordinate high. Okay. So price traded to this gap, creating what? Inefficient parent hybrid, right? So this is the subordinate hybrid, okay, or subordinate high. So we have destroyed subordinates here, destroyed subordinates, and price created another what? So in another context, right, this is a subordinate high, right? And basically on this lower time frame context, this is a swing high, okay? So you might not be able to enter right there, right? So immediately you see this displacement against this first candle, right? The retracement to that candle will be yourselves. Another year we have what? Efficient parent hybrid. You might not be able to enter right there. Immediately price came back to, trade this. You can enter right there again. So this is what? Inefficient parent hybrid. But if you enter here, your stop loss has to be this above this high because this high is an efficient parent hybrid, right? This one is not efficient. We have another efficient parent hybrid, right? We have a swing high, subordinate high, subordinate high. Okay. So you can see how that, we have whenever price takes liquidity as well, you can see price, this is an efficient parent hybrid. I'm coming. This is an efficient parent hybrid, okay? Because it rebalanced this gap efficiently, right? You can see that. Now, but it was destroyed here. Now, this is what destroyed parent hybrid, okay? From there, it was a liquidity. This I is acting as a liquidity. Now, what do we have now? We have parent high, parent swing high. But remember, this is a lower time frame, but you can apply the same idea to all time frames you get. So now, if parent swing high, we have destroyed subordinates, right? Immediately price displaced against this low, right? You can see you can have a price retrace back deeply to this high. You can have a very nice entry there, right? So efficient parent hybrid, you can see it is very simple and it has a very, very stupid win rate. Stupid high win rate, I'm telling you. So you just have to know what you are looking for in price. So basically, what am I expecting for this guy this week? Let me clear the charts. The network is kind of bad. I don't know. Sorry, the network is kind of bad. I don't know. So what am I expecting for this guy this week? So I'm going to clear all the charts. So I have a very nice view. So this is weekly time frame. This is weekly time frame. Now, the idea of subordinate swing high, subordinate swing low will allow you to trade efficiently on lower time frame. That is one of the benefits of it. That is one of the very benefit of it. And I'll be teaching that idea in frameworks, uh, under the content of frameworks in flow series, right? So because that will give us an idea of entries, a protected high and a protected low, unprotected high and unprotected low, how it increases probability and how it decreases probability, right? So that will allow you, when something has increased probability, you know that, okay, this is my high leverage, so I have to make use of this opportunity. Okay, reduced probability. Now, this is where I have to use 0.5, 0.1% of my portfolio. You get what I'm saying? So that's the idea. So now let's go to monthly. So now coming to monthly, what do we have now? This is swing high. All right, this is a parent swing high, this is subordinate high, this is another subordinate high. Now, but what do we have? We have destroyed subordinate high right there. We have destroyed subordinate high. And then what do we have here? We have efficient, what? Efficient subordinate hybrid because it trades into a gap. So now there's literally a lot of manipulations that happen there. We now have a swing high. And then we have what? Efficient subordinate swing high. So I'm trusting this high, to allow price to draw to area of liquidity. Now, we've identified the structure of this price. So now where is the liquidity? Basically, the first thing that you have to always look out for is liquidity in form of what? A high or a low, right? So now the first thing first is, we have relative, and, it's quite clean below this low, okay? So is there any displacement that is showing that we might want to draw to this high, to this low? Yes. Is there any displacement that is showing that we might want to draw to this high? No. That is very simple, right? So you can gauge high probability, low probability based on this idea I just delineated. First thing first, where's the draw on liquidity? Higher time frame draw. right? Is there any displacement or willingness to draw to this low? Yes, which is what is really currently going on here. This is another buy side. Is there any willingness or displacement that is showing that we want to draw to this? Obviously, that is very obvious. No. So this is very obvious in terms of selling to this low, right? So we have what? Efficient parent hybrid. We have destroyed subordinate hybrid. We have parent swing high, and we have our subordinate high here. Okay. So that make it we already have structures aligning to sell. You get what I'm saying now? So the only problem here is that um actually I was in these cells for this subordinate high. Okay, I was in these cells for this subordinate high. Some of you will see that. Okay. Some of you will see that because I posted it I think last 2 weeks, right? So the only thing I'm waiting for right now, I want price to violate this low, right? And then retrace a little bit inside this to generate, liquidity in form of like using AMD to manipulate price and then draw to this low or this low first because there's something serious below this low. We have relative low with this low. Okay. You can see we still have loads of liquidity here, right? You can see that our displacement was very massive, right? So this was the first gap. This was the second one. And this first one coincides with with the first liquidity, with the first fair value gap or CB. That is why price is interested in using it because it has structure. See, that structure, it has a structural low that price broke, and then we have a gap created before we broke that low. So price will be interested in using the first one compared to this second one, right? So I want price to break this low and then retrace back in. Price can come back to trigger this gap, this candle as what as breakout for sales, to sponsor sales so that we can attack this low. All right. So now this is a potential low. This is a potential gap. That price might show us what? A destroyed parent um it destroyed inefficient parent hybrid because when price was going up, price trade into this gap, giving us what? Inefficient parent hybrid. Now, whenever price come back to that, we might have what? A destroyed parent hybrid or destroyed inefficient parent hybrid. And it is expected because price is bearish. It is very much expected. So you want price to destroy this low so that we can have a retracement back in. And when price was going up, pay attention. If you want to buy this price, it is very easy. Price straight to this low. It gives us what? Inefficient parent hybrid. Now, this was the swing. This was the parent low. This is the subordinate low, and this is the subordinate low. Now, this candle trades against this subordinate low. Now, trading against that, price retrace day pain, and when this candle opens, when this candle is actually opening because price has already traded down to this down close candle. This candle is a down close candle in form of what? Bullish order block. So price trades back up, to draw to the real potential of price in form of what? Of a high. This very high or this gap itself, right? Now this is what? Inefficient parent hybrid. It doesn't have to be efficient because price is willing to draw fast to an area of liquidity. You can see we are really, really running down, right? And the same thing happened here. It was not efficient because price wants to draw to this, okay? And price might not be efficient because price wants to really draw to this or this. We don't know, but we have to follow the flow, right? So I'm bearish for this guy, but I have to see something. Price has to break this low first, right? So today is Monday. I want to see how price trade on today. So that will dictate what I will be doing tomorrow, Wednesday, Thursday, and Friday. Okay. So let's go to dollar. Let's see what dollar is doing. So now this is dollar, right? This is dollar, this is dollar, this is dollar. Dollar is quite stubborn though. So this is inefficient parent hybrid. Now we have destroyed inefficient parent hybrid, triggering an up close candle, right? So I'm based on the narrative that we're having in terms of draw of liquidity, right? Where is price showing intention in wanting to draw to? Of course, this low. We have a displacement that shows the willingness to do that. Okay, and this low is quite relative. All right, it is quite relative. And this is previous year high. This is previous year low, right? This is 2 years high, and 2 years low is I think somewhere around here. I don't know for sure. So that is based on liquidity, but based on structure, right? Price has already destroyed this parent inefficient high. Okay, so that make a lot of sense. So we might be anticipating this first. So liquidity first, then structure follows. You get what I'm saying? So that's the idea. So I'm still very bearish for this guy. So on a weekly time frame, price, we might be wanting price to, because this is, and I like how this candle opens. This weekly candle, I like how it opens. I like how it opens very well. You know, I like how it opens. So, and we have a gap. We have a gap. So this is a potential what? Inefficient parent hybrid. We don't know for sure. But based on what is currently happening, it's showing like inefficient parent hybrid, right? So we might catch the subordinate high to sell to where? To this low or to this gap, all right? Okay, to the gap. But all these inefficiencies in price, I would want price to come back to rebalance them. All right. So I hope that makes sense. So I'm actually bearish on dollar. I'm bearish on dollar, and I like how this candle opens actually. So I'm bearish. So basically that's what I'm expecting for price. And I will see you guys in the next one. Yeah, cheers.